Good afternoon. Good afternoon, everyone. Welcome to our quarter four and full year financial results presentation for 2024. I'm joined today by our CEO, Georgy Shagidze, and CFO, Makar Stoyanov. My name is Evgeny Risovich from Investor Relations here at MAIB. Together, we will present to you our key results and answer your questions at the end of the call. You can also ask questions during the call in the chat. But at the end of the call, we will have time where you will be allowed to speak. Now, before we start the presentation, I wanted to attract your attention to a forward-looking statements disclaimer. This presentation includes statements about expectations, forecasts, estimates, and other projections that are subject to a range of risks and uncertainties that could cause actual results to differ. We outline several potential risks here, including macroeconomic, regulatory factors, market risks, operational challenges. So we caution you not to rely on these projections when making investment decisions. All presented results are based on unaudited consolidated financial data prepared in accordance with IFRS financial standards. I will now ask Georgy to summarize MAIB's performance.
Good afternoon, everyone, and thanks for joining the call. To start with the macro, 9 months GDP was up slightly because of the third quarter, because of the weak third quarter, which was related mostly to agro and the agro harvest. But still, for the 2024 GDP forecast, along with the forecast of 2025, remain in between 2 and 3.5%. With regards to annual inflation, January inflation was 4.6%. December inflation was about 7%, and this was December 2024. This was related to the energy prices, and we see a little bit more inflation now. In terms of our strategy, we reached about 770,000 MyBank users with 1.4 million cards, and already 75% of our deposits and 74% of our loans are granted online. Our return on equity for the full year 2024 was 18%. Our return on asset was 2.5%. During 2024, we basically dispersed about 1 billion in dividends and buyback back to the shareholders, which makes our strategy of dividend payout for the last 3 years equal to about 40%. In terms of growth, our assets grew 15%, our loans grew 28.1%, and our risk-weighted assets grew about 21%. Again, you may continue with the macro update, please.
Thank you, Georgy. So we'll go through the macro and country highlights, then back to Georgy with bank's overview and strategy, and then Makar will continue with financial performance for the year and the quarter. So once again, to reiterate, the economic performance has been mixed. We still do not have the full year results. They come out in mid-March, so about a month later. So based on the 9 months, GDP growth was 0.6%. This was due to quite a weak quarter Q3. The year started quite strongly, 2% plus growth. Then Q3, which was affected by weak performance in agriculture. So we will go through in a little more details on the forecasts. So another important number here is debt to GDP estimated at 37.9. It ticked up a little bit, but once again, this is preliminary number and it will be adjusted. Last year's debt to GDP was 35%. In terms of trade, it's important to mention we saw declines in exports. This was due to two factors. Again, re-exports have declined, and then uh, agricultural goods, which make up about 50% of good exports, have declined as well. On the other hand, service exports continued to grow double digits and remained a strong point for Moldovan economy with uninterrupted year-on-year growth. Here we will briefly focus on the estimates and forecasts. Estimates for 2024 average is 2.4. We have not seen yet any revisions. 2025 GDP is predicted to grow at above 3%. These are estimates provided by EBRD, World Bank, IMF, Moldovan Ministry of Economy, and Vienna Institute for International Economic Studies. Now, important to mention is the evolution of the policy rate. As Georgi mentioned, we saw an increase in inflation. It ticked up from 4 to 7% in December, and the National Bank of Moldova's governor Anca Drago, in her interview last month, predicted that we will see inflation above 10% this year. As a result, the National Bank of Moldova responded in 2025 by raising policy rate twice already, from 3.6 prevailing rate in the second half of last year to 6.5 as of last week. So the inflation forecast from NBM comes out at the end of February. We will see a clearer picture. So far, they have increased their uncertainty corridor from plus minus 1.5 to plus minus 4% on their forecasts. Next slide talks about the performance of Moldovan lei. It has remained stable. By the way, since the start of this year, we use euro as the reference currency, and it has continued to be stable against the euro. In 2025, we saw small declines in official reserves. Once again, this is connected to increased costs of energy. The decline has been small, from 5.7 to 5.5 billion US dollars. This is still very comfortable level of foreign currency reserves. 7 months of imports. It's one of the highest levels among the peer groups. So in terms of exports, once again, we saw 5% decline in 9 months. That's latest available data. As I said, this was due to two factors: re-exports falling and agricultural sector weakness, and this was offset by growing exports in services, particularly the IT sector, which has now exceeded 1 billion per year. Based on the 9 months figures, budget deficit remains modest, but in the fourth quarter, we are expected to see increase because of the energy subsidies, which have grown more than originally expected. Now, lastly, I will mention some key political developments. So in the beginning of the quarter, we saw the pro-EU referendum victory and Maia Sandu, the incumbent president, retaining her seat. EU unveiled a plan to provide Moldova with 1.8 billion euro package over the 3 years, mainly focused on infrastructure investments. at the end of the year, Russian gas transit stopped to Transnistria. As a result, Moldova stopped its purchases from Dnistrovsk GRES and of electricity and switched fully to international markets, mostly in Romania. As a result, we saw substantial price increase of wholesale electricity purchases of nearly 80%, which drove inflation, as we discussed earlier. Currently, the talks are continuing on how the Transnistria region will be supplied in the future. Now, back to Georgi to talk about MAIB's performance and strategy.
Thanks, Evgeny. This is a slide about MAIB at a glance, just to refresh this data. We are by far the largest player on the market, with the market share of 35% around in total asset, 38% in total loan, and 35.7 or 36% in total deposits. We are having the strongest payment capabilities on the market, along with the strongest brand and the best customer experience. With the net profit for the quarter is about 16.5 million euro, 52.1% cost to income, and very low NPL ratio of 1.7% with the coverage of 232%. We'll speak about the numbers more, but I think one thing which we can highlight here is the profitability of 18% return on equity for the full year, with the decreasing NIM, and NIM being at 4.3% last year. If we move to the next slide, this is our strategy. Again, we have these four pillars on which we are basing our strategy. One is to put the customer in the center of everything we do, and here we have many initiatives that will continue throughout 2025. Digitalization clearly is something that is on top of our agenda. Payment, as I said, and a new format of our branches, which we are implementing. In parallel, we are considering the Romanian market, or expansion in Romanian market, focused on Moldovan diaspora, as well as perhaps a broader customer base. But then again, this will be asset light, digital expansion, and then the key focus will be to the diaspora. If we move to the next slide. So these are the key selected operating highlights during quarter4. To continue supporting our SMEs and our business banking, we raised or attracted another facility from our partners. This time it is EBRD, and the facility is about 40 million to enhance access to finance for MSME clients in Moldova. That helps the customers to take the loan in the absence of collateral, and this is a big help to the customers themselves. We continue to implement our ESG strategy, releasing the second ESG report, and being awarded as the best bank for the sustainable finance in Moldova for 2025. We have a number of initiatives that we will be doing or implementing in the medium term to take or elevate our ESG readiness or maturity to the next level. We are happy that we were named in top 3 employers by the country with the respective agency after the research. And recently we refreshed our our purpose and vision of MAIB, which we discussed it with all employees together on Chisinau Arena, and our new purpose is now to create opportunities for people and businesses to thrive, and our new vision is to be a technologically advanced, people-centric company expanding into Central and Eastern Europe. So they will be driving us and our staff to take the bank to the next level. If we move on to this next slide again. Back. Yeah, so these are our digital numbers. Our daily active users as a percentage of monthly active users stood at 37% for the end of the year, and our monthly active users are about 67%, with online retail loans and online retail deposits being at 74% and 75% respectively. We launched several new features in our app, such as live page, such as insurance and others, which increases the engagement of our customers. And as a result, you see these numbers going up. And 2025, we will continue adding new features in the app, making it more lifestyle, more with number of features that people are using with lifestyle purposes, as opposed to only banking, which will stay there, of course, as the main functionality of the bank. In terms of cards in circulation, we are at 1.4%. Retail users, paying users is about 64%, and we reached about 21,000 POS terminals in the country, now having the largest payment infrastructure in the country as well. If we move on to the next page. This is a little bit of summary of the financials. Makar will go through the details. Our net profit for the year grew about 16%, reaching 1.4 billion in 2024. Again, we disbursed about 1 billion back to our shareholders in the form of mainly in dividends, but also in share buyback program. Our return on equity was 18%, and this all happened with the decreasing interest rates or decreasing net interest margin, which stood at 4.4% for the 12 months or 4.3% for the quarter for last year. Cost to income decreased to 50.6%, and our liquidity and capital adequacy ratios remain very strong at 274 and 20% respectively. Makar, please.
Yeah. Hi everyone. Hi, afternoon. Let me a bit indeed deep dive on the drivers of financial performance. So the last 12 months showed the strong performance of the bank. If you look on the loan book, it has increased by close to 10% last quarter, 9.7%, and year on year over 28%. All three business lines have increased, though the biggest contribution of the increase was on the retail side, especially if we look on the mortgage, year on year, it's increased by over 44%. If we talk about the legal entities, both corporates and SME has had a strong increase on the loan book. And what is a good news is that investment loans have been reviving, especially in the second part of the year. But both SME increased by over 24% year on year and over 5% last quarter. And the corporate, similar picture, 18% year on year and close to 10% on quarterly basis. As a result, our market share increased to 37.9% on the loan side. Similar strong performance we have experienced on the deposit side, where we saw increase of the portfolio by 3.6% quarterly basis and over 18% on yearly basis. Here, similarly, the strong impact was coming from retail, especially as our strategy and our initiatives focusing on the bringing more clients, especially expanding the salary projects, which is the strong base for the further penetration, cross-sell and upsell. But similarly, SME deposit portfolio has also increased by over 22% on the yearly basis and close to 7% quarterly. And corporate has declined a bit by 9.5%. And here is because we had important concentration of some of the corporate clients, and it's very seasonal. And as a result, and during the winter, there is some decrease in the deposit of the corporate. If you go to the next slide, we had a strong performance in 2024. Net profit overall on yearly basis increased and will come later. But if you look on the quarterly basis, it has some decrease around 20%. And it's driven, it's quite seasonal, and it's driven by a couple of factors. From one side, a bit lower FX income. Again, it's quite seasonal given that usually Q3 is much higher FX income. But we also managed to, if you look on 1 year ago, we still managed to increase it. Additionally, there is some seasonality in operational expenses, which come in Q4. And then we had some kind of increase of credit risk, especially on the SME side, but was marginal, but had some impact on the net profit, which you will see a bit later. As a result, in Q4 of 2024, our ROE is 15.9, and then pre-provision 22.8. But if you look on the yearly basis, it's around 8, or it's 18%. Return on assets 2.2 and 3.1 respectively, pre-provision, post-provision and pre-provision. We go to the next slide. Net interest income has increased by over 4% on the last quarter and by over 12% on yearly quarter, the same quarter a year ago. And that's important to highlight, as Giorgi mentioned, despite the fact that interest rates went down and Moldova experienced the bottoming up the level of interest rate in 2024, especially in Q3, Q4 last year. But given that, we still stabilized our margins around 4.3%. We have increased in the interest earning assets, loan book by close to 10% quarterly basis and 28% on the yearly basis, as we've seen. And debt securities will also have increased last quarter by 20% in government bonds, both locally and internationally. We have managed to bring down our cost of funding from over 3%, 3.1% in Q4 of the year ago, up to down to 1.7% in the last quarter. And as a result, what we have seen, we managed to keep net interest margins around 4.3%, decrease cost of funding, and optimizing the structure of our interest earning assets. And what we see as a result, the net interest income of 595 million in Q4 alone. If you go to the next slide, of course, our focus is to ensure a stable, diversified source of income. And our non-interest income is an important part of operating income. It's over 1/3 of our income come from the non-interest income, which is split 50-50 more or less between fixed and fees and commissions. In the fourth quarter, non-interest income was slightly lower. Again, as described, the main driver was Forex. And some decreased number of volumes, again, quite seasonal in Q4 of ATM transaction and Forex as such, also in ATM. Proportional net fees and commissions as a percentage in the operating income, it's kept around 15.5%. But if we add also Forex, it's over 33-34%. If you go to the next slide. And of course, another focus of the bank is managing operating expenses. If you look on yearly basis of a quarter ago, it's the same quarter a year ago, we increased our OPEX 5.4, which is in line with the inflation, which average inflation, which we have seen in the 2024. Last quarter, the increase in OpEx was a bit higher, and it's quite seasonal, given kind of a couple of things. One is annual performance bonus, which people receive at the end of the year or strong performing year. There are some marketing campaigns which we have launched at the end of the year, and some trainings programs which we also prepared for the people and launched in Q4. All this brought increase to 495 million in the Q4 2024. Again, despite that, our cost income, our main focus on the operation, managing efficiently the bank, went down by 3.9 percentage points versus last quarter 2023, though slightly increased to close to 7 percentage points versus Q3. Overall, if you look on the yearly basis, 50.6% our cost to income ratio. Cost per assets around 0.7, slightly increased now in Q3, and now slightly increased to 0.8% per asset. Now, the growth and evolution of portfolio goes line on line with a healthy growth and kind of good management of the proactive management of the risks. So if you look on the NPL ratio, it went down by 1 percentage point from the year ago, by 0.1 percentage points a quarter ago, and it's 1.7%. We had some increase in the cost of risks on the SME side. It's because also provisioning of the restructured loans for some clients, especially on the agro portfolio, where of course we had also quite challenging 2024, some droughts. As a result, we kind of increased the provisioning and some slight increase on the defaults. But if you look on the rest of the portfolio, corporate and retail, the evolution was positive and good, which allowed us also, for instance, corporate side to release some provision driven by some reassessment of the key corporate clients. While retail side cost of risk was linked to the strong portfolio expansion, but there is no any signs of the deterioration of the quality. So as I mentioned, NPL stayed stable around stable between Q3 and Q4, and currently is 1.7%. That being said, the NPL coverage ratio stays quite strong, over 230% at the end of 2024. And the cost of risk, as I mentioned, for reasons, especially on the SME side, or that's the main driver, increased from 1% to 1.1%, or 81 million lei. Next slide. And all this with a quite strong high liquidity. LCR is 274%. It's decreased versus September because we optimized at the end of the year our funding between current accounts, corresponding accounts, and so on. So it was kind of the management decision driven to optimize the structure, but consistently above minimum requirements, 100%, and it's above 270%. Capital adequacy ratio will not repeat, but is again a strong buffer above the minimum requirements, 20.6%. Decrease between end of 2023 and end of 2024 is driven from one side from evolution of portfolio and the result risk-weighted assets, of course, but also a big impact had the dividends and share buyback. But again, that is puts us over 20%, which is quite a buffer versus our minimum requirements. And Tier 1, similar story, is 19% at the end of the year, while minimum is 13.8%. Thank you.
Okay, thank you. Thank you, Makar. Now we have time for questions. If you would like to ask a question, there's questions on email. There's no questions on chat, but you can raise your hand and we will give you an opportunity to speak. Okay, so for now there's no hands raised, but we have a question on email, and it relates to the energy price increases. Do you expect any negative impact on loan portfolio quality, and what percentage of portfolio is Transnistria?
We don't have a portfolio in Transnistria, even though certain Transnistrian customers who have crossed the river and have established business on the right bank side may be borrowers. From the perspective of energy price increase and inflation, as the thing stands now, we do not expect any material impact from these prices. So we continue meeting with our customers, but it seems that they feel strong from the perspective of how they can withstand from the margins, how leveraged they are, and so on. Overall, Moldovan banking sector penetration, which is very low, is very helpful in such cases because we don't have over-leveraged customers where 1 or 2 or 3 percentage point movement may create immediate problem.
Okay, thank you. We have a question about the loan portfolio growth, which was nearly 30% last year. What was the reason, and will it continue?
So the growth was across the board, and all the sectors grew, especially retail. But in retail, both secured and unsecured loans grew. In terms of the mortgages, there was the Prima Casa program by the government, which incentivized or supported growth further. That said, we expect this year the growth to continue, but perhaps with a lower rate because of the inflation and related interest rates increase, which we are seeing right now. Even though the growth from today's perspective between 15 and 20% seems realistic.
Thank you. Any news on secondary new listing to boost liquidity and access for international investors?
No, we don't have any news. We still wait for the regulatory or the law change, which would allow the listing feasible. And if that happens this year, then we will update the investors.
Okay, thank you. There's one more question on email, and once again, I urge you to raise your hand and we'll give you an opportunity to speak. This one is about non-interest income, which grew substantially, and how sustainable is this growth?
Well, overall, we anticipate 15 to 20% non-interest income growth for the recurring for the medium term. The forecast for FX income, 15 to 20% net fee and commission income growth. Forecast for FX income is not that straightforward because it depends on many things, and maybe the FX income growth will be less than 15 to 20%. So the short answer would be net fee and commission income 15 to 20% is realistic. FX income maybe will be slower. I don't know, Makar, if you want to add anything.
No, I think, and what we experience, that's it. And what we experience also, the proportion of other non-interest income, we expect to even slightly increase, but be 33, 34% at least. So kind of the proportion, because more clients, more transactions, higher penetration.
Okay.
Okay. Thank you everyone for participating in this call. By the way, we have published the investor calendar where you can consult the dates of our releases and the participation in conferences. And by the way, thank you to the team preparing the report as we move 1 week closer to the closing date with this one. Thank you.
Thank you very much, everyone. Have a nice evening.
Thank you all. Bye-bye.